Hey traders, David Frost, My Strategic Forecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, March 11, 2024. We're looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? We got plenty of stuff to discuss. We're going to start with, we're still in an uptrend. The trend is your friend. Nothing has changed. Now, let's go back to Friday, and A, is that a reversal candle? And technically it is. And B, did they hit the next target on the upside at 516.65 that was provided in advance of price reaching that or said target? The answer is sure they did. Does any of this mean they have to fall? No, it doesn't. However, we do have a couple of things on the board. You go over to the weekly chart and you can see that yesterday or last week put in one of these doji candles. It's a sign and or signal of a trend change. The weekly chart is now in an on-time type of situation. Write it down, put it on a sticky note. Is she a little bit extended from home base on the weekly chart? Answer is yes. Coming sideways, giving home base or the 20-period moving average a chance to creep up to price. That's customary. Also, the flip side is a pullback closer toward home base is also customary. They don't have to do one or the other, and they can do a combination of both. Time is more important than price. When time runs sideways, it's eating away time, which is by definition also a corrective move. Write that down, put it on a sticky note. You can see where they basically back tested today after gapping lower. At any point or some point, they ran a test from the underside of our trend line. That trend line is still uber important, despite what some people may or may not believe. The proof is in the pudding. What do we have this week? Well, number one, we just rolled futures contracts from the March expiration contract to the June or M expiration contract. Weird stuff happens around the roll. That was late last week. And not to mention, we have quadruple witching options expiration week. What does that mean? That means that not only is it regular way options expiration, but it's also quarterly expiration. Quarterly options expire. Index options expire. All kinds of stuff expire. Weird stuff happens around quad witching options expiration week. Take that at face value. Let's talk a little bit about how this thing really works from a big picture perspective. They put in a tail candle. It's a doji candle. You're in an on-time type of situation. Are they going to make it easy and come right down? No, they rarely ever do that. A, it's hard to kill a bull. And B, it's hard to kill a bull. Fits and starts. They go back up. They run a test of the high. They do a retracement halfway home. All that stuff is, as they say, on the table. Remember, when you look at the daily chart, all they're doing is having a pullback from getting a little extended from home base. They're still above home base or all the moving averages, and therefore the trend is your friend and the trend is the dominant thing. The trend is up on a daily chart. It's up on a weekly chart. It's up on a monthly chart. The trend is the dominant thing regardless of how extended away from home base or the 20-period moving average they may be. How'd we do inside the numbers today? Did any traders make money inside the numbers? Post a comment under the video, please. If you remember from the live room, inside the numbers, how'd you do today? I'll give you a hint before we take a look at the notes. We caught low of day, 508.50, give or take. We caught low of day, by the way. Now that I have your attention, here's a copy of the notes. This is from 0dark30. You can certainly pause the video, read the notes. I urge you to do so, and double check the work. Let's narrow things down a little bit. Take a look at 9 a.m. That's 30 minutes before we're open for business. The thieves in the morning have tested and retested an important spot, 509.80. Also is some unfinished business. What I urge traders in the live room to do is exercise some patience and wait for the next price. Below on candle closes, the door opens for the next leg. First to run a test of 508.60, give or take. And you'll also note where the target is on the upside once they bounce, or flip side rescue operation, 511.75. Where's 511.75? How about just a few pennies short of high of day? We had low of day, we had high of day. How you doing? 932, here's the trade. 509.80 is a target as long as price is below 511.75. They were in the middle at the time. It's a target. Doesn't mean it's a long trade. Bounce back is around 508.50 down to 507.15 for now. That's the bounce back place. 508.50. That's right, 508.50. What more could you be looking for from an S&P support and resistance perspective? Pause the video, read the notes, go back to the chart, and double check the work. It's all in here. I highlighted catching the morning low. Then we have targets. Then we have overhead resistance. Then we have the rescue operation price, which was up to 511.75. It was all in here from, as they say in the trading parlance, the get-go. What about stocks on the move? We had Boeing and Alcoa today, only two on the board. Alcoa did not hit its entry target. It's off the board. However, Boeing did. Real quick, here's a 5-minute chart of Boeing. As you can see, they bounced it at the first number, continued to the second number, ripped it back up in the other direction to the first number. The numbers work. We had good participation, certainly at the second number in the live room. Couple of dollar profit in Boeing. Nice trade, actually more than that. What more could you be looking for? Well, I'll let you know. But wait, there's more. 475 was a bounce place in Meta today. We had some traders that front ran that by a little over $1 up to 576 and change. And what we talk about in the live room is stuff like this. So if you reduce a $475, $500 stock down to, let's say, a $45 to $50 stock, that same dollar becomes 10 cents, 15 cents, 12 cents. We expect stuff to come up short, other times spike them through. Coming up short by 10 or 12 cents or spiking it through is the same as $1 or so in a $475 stock. And we put that in perspective. The way we say it in the live room is we don't necessarily have to always split hairs over pennies. This is what our numbers in NVIDIA look like for the live room members this morning. 846.95 down to 842 was the zone. Low of day is exactly 841.66. And the rip-roaring rocket ride back up in the other direction all the way up to 887 or so. Nice $45 rip in NVIDIA. What more could you be looking for from a live trading room? Seriously. Ask yourself that, notwithstanding the education that goes in on here every single morning. So when you look at it, how'd we do today in the live room? Well, we had the spiders caught low of day. We had Meta, NVIDIA, and Boeing. What more could you be looking for? For rock solid opportunities on a Monday morning. Nice stuff. Trade right alongside David each and every morning. And then compare it to how you do by yourself or with some other trading room. Use apples to apples comparison. What's going on over in Camp IWM? Above all the moving averages, trend is your friend. Similar candle to the spiders from Friday. Doesn't mean the market's going to come straight down. It means it's a pullback until something more develops. We take them one step at a time, one candle at a time, one day at a time. You don't want to get out over your skis, as they say in the trading parlance. Weekly chart, same on-time type of situation. Above all the moving averages, trend is your friend. Beware of a couple of things you might see out there on the interwebs. You'll see something going like this and say, hey, look, there's a head and shoulders, inverse head and shoulders pattern on the IWM. And they'll draw this and they'll say, look. And then you come over here and I'll say, no, it's not. It's the wrong direction. It doesn't follow the rules. It doesn't exist. Beware of what you find out there on the interwebs. For now, as long as they stay above all the moving averages, this is just a pullback in a continuing uptrend. Nothing more, nothing less. Where's your red flag situation? 201. Start closing daily below 201, and we could have a visit from Irene. Write that down. Put it on a sticky note. 201 is uber important for them to stay above for the bull case in the IWM. This is my first favorite market leading indicator, down about 0.8% today. The S&P was basically flat-ish. So we will heed my favorite market leading indicator leading in the negative direction with relative weakness. But wait, what about my second market favorite leading indicator, which had relative strength against the S&P? Team Transports, the folks down at the transportation department. We'll start with the bigger picture because the larger time frame is always dominant. The weekly chart is above all the moving averages. Trend is your friend. You've got this same eating time off the clock box above the moving averages that we've been looking at for days and weeks and weeks and weeks. This is just eating time off the clock, building energy for another move higher. The daily chart going back and forth is normal garden variety stuff. And if they get back below these moving averages, which they're hovering on right now, that's going to be negative for the short duration, for the short term from a daily chart perspective. We're going to use 15,265 as a bogey. It's not necessarily real close to current price, but that's the number where if the bears were able to push below and close daily below there, you could have another leg down of selling pressure that ensues. Team Transports. What about the Q people? They're farking around with the moving average, the 20-period moving average. Pretty decent volume type reversal day situation on Friday. We're going to heed that. As long as they're above all the moving averages, nothing wrong with the tape. Trend is your friend, but can they come back in toward home base's moving average on the weekly chart, or toward the weekly chart moving average or home base on the weekly chart? Easy for me to say, and the answer is yes, they can. And if they did that, the daily chart is all the way down here, and it looks different than it does today. One day at a time, one candlestick at a time. How about the financials? How long have we been talking about 40.80 in the financials? Ever since they hit 40.10, I said the next place is 40.80. They stayed right in between until they got to 40.80, and then they couldn't get through 40.80. It's funny how that works. If there's nothing wrong with the financials, there is nothing wrong with the underlying structure of the market. At present, there is nothing wrong with the financials. Weekly chart, like most of the rest, are a little bit extended away from home base. Coming back toward home base or eating some time off the clock will be customary at some point. If they get above 40.80, I have a next place. Where is it? It's all the way up at 41.40. That's if they start getting above and closing candles above 40.80. That's the next place, about 60 cents higher in the XLF. What about Smash Mouth? That's a pretty good reversal from Friday on decent volume. Reversal candle up near 240. Doesn't mean they go down every day, but that's the sign and or signal of a trend change. This is part of the bucket of things that I teach in the course, Lazy E-mini Trader. This is one of them, accompanied by decent volume. A spike in volume, a reversal. Doesn't mean they all work, but it is, as they say in the trading parlance, textbook. What's the blue line represent? 213.35. That is the most recent breakout area. They will eventually come back to run a test of that spot. Happens to coincide, give or take, with the 20-period moving average on the daily chart. Garden variety natural support area. to 1335, give or take. You also have a big time breakup candle low in that area. You have three things where the market will A, be attracted to that area for different reasons, and B, find support and likely bounce off at least or at minimum from an intraday perspective from that area. This is the way the market works the large majority of the time. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.